Hello, I'm Lelda Smits from Australia's Finance News Network. I sat down earlier with Jim Rogers, American investor and author based in Singapore, to hear about his 2012 investments. Now, Jim, with all the volatility we've had, precious metals are typically seen as insurance. The price of gold's up 12% for the year, but I know you don't like to be on the side of the boat with company. Are we due for a correction?
Well, no, the gold is up 11 years in a row, which is very unusual for any asset. Throughout history, that's very rare. So gold has been correcting for 3 or 4 months. It's going to continue to correct, in my view. I own gold. I own silver. I'm not selling them. I expect them to continue the correction, and I hope I'm smart enough, if they go down more, to buy more. And if they go down a lot more, I hope I'll buy a lot more. It would not surprise me at all to see gold at 12 or 1,300 US dollars an ounce sometime in the next year or so. If that happens, I hope I'm solvent enough and smart enough and brave enough to buy more.
But many speculate gold will be north of 2,000 US dollars an ounce, especially on another round of quantitative easing. Do you agree?
Well, yes, absolutely. Gold will certainly go over $2,000 sometime in the next few years. There's no question about that. And it may even go much, much, much higher if they continue to print money in the developed world the way they have been. Just in the meantime, I would not be surprised at a correction. As I say, it is correcting. I hope it continues to correct. I hope I buy more.
So, Jim, at what price will you be buying gold?
Oh, Nelda, I'm not smart enough. Watch FNN. You can find people on FNN who can tell you every day.
You mentioned before between 12 to 1,300 US dollars an ounce. Would that be tempting enough for you?
Well, if it goes to 1,200, I hope I'm smart enough to buy a lot more. I would not be at all surprised to see gold at 12 or 1,300 US dollars an ounce sometime in the next few months. I have no idea why, except that it's been so strong for 11 years in a row. But Lelda, if America goes to war with Iran, I might buy gold at 2,000. You know, I won't wait anymore. I'll have to buy it as it skyrockets. But at the moment, I'm waiting for more correction before I buy gold.
Okay, Jim, so where else should investors be looking for safety?
Agriculture is probably the safest place in the world right now. As far as but Lelda, I don't like to use the word safe when I talk about the investing world. There's no such thing as safe at all. There's no such thing as safe when you're talking about investing. Even if people put their money in cash, what kind of cash? If you put your money in the wrong cash, if you put your money in Icelandic krona a few years ago, you thought you were doing something very conservative and safe, and you got wiped out. So you have to be careful using the word safe. Agriculture, in my view, is going to be one of the best areas of the world economy in the next few years, whether you buy farmland or buy farm products or become a farmer. Lelda, become a farmer. If you really want to have a great future for the next 30 or 40 years, learn how to drive a tractor.
That's certainly something I might consider, Jim. But in the meantime, how is investing in stocks different to investing in commodities when both experience price fluctuations?
Well, as I said, everything experiences fluctuations. I don't know anything that doesn't experience fluctuations. If you look at the stock market over the past 15 years or so, it's fluctuated much more than the commodities markets. People say things like, oh, commodities are too dangerous. Look at the NASDAQ in the United States. Look at technology in the United States. You want to see fluctuations and problems. Everything fluctuates. And if people don't understand that, they should not be investing. This is a difficult and dangerous way to make a living.
Okay, Jim. Now, if we can turn to your interest in Australia, you recently teamed up with a local group as an outside independent advisor for a new unlisted closed-end rural land fund called the Laguna Bay Company. Could you explain what your role entails and how the fund works?
I'm just exactly as you said. I'm an outside independent investor. When they want somebody to give them a view or a different view, they call me up and I answer questions. I help them try to figure out the best way to make money in the next couple of decades. And as I said before, agriculture, farming, if you buy the right land and you find the right farmers, you're going to make staggering amounts of money because agricultural prices will go up, the value of the land will go up, your profits will go up every year. That's where the most money is going to be made if you can find the right land and the right farmers.
So how many properties or hectares has the fund identified to buy?
We've found lots of hectares to be purchased. We haven't bought any yet. We're in the fundraising stage at this point. But we found farmers. We found hectares. We got to find money.
And in which states have you identified those opportunities?
In the southeastern part of Australia for the most part.
So which countries are you eyeing for investment into agriculture?
Well, you know the agricultural countries as well as I do. Brazil is big, Argentina, America, Canada. I'm not looking at America, but the agricultural powerhouses we all know. New powerhouses that are developing. Maybe in Africa, we're looking at Africa, not with Laguna, but I am with other people looking at Africa. Myanmar is perhaps the most exciting investment nation I know as we speak here in 2011. Myanmar is where China was in 1978. They're just opening up and starting over. So Myanmar I find very exciting, especially for agriculture. There are places in Africa, I cannot tell you how much money is going to be made in Africa. The Chinese are down there buying up as much agriculture as they can in Africa. There are great opportunities in the world. The West and the developed world may have serious problems facing us, but there's spectacular opportunities, Nelda. Don't get despondent.
So what factors will keep the demand for agricultural land strong?
Well, one is that the world continues to become a bit more prosperous and the population continues to grow, no question. But more important, Nelda, the inventories of food are now among the lowest in recorded history. We've been consuming more than we've been producing for at least 10 years now. And we've got great shortages facing us, Zelda. The average age of farmers in Australia is 58. In Japan, it's 66. In America, it's 58. Huge numbers of farmers in India commit suicide every year. Likewise, in England, the highest rate of suicide of any profession is agriculture. In Spain, you have old people just leaving the farms. They can't do anything anymore. So we've got big shortages of farmers developing. And the only way that's going to change is if prices go high enough to make agriculture attractive, to attract capital, labor, management. Become a farmer. When I say learn to drive a tractor, I'm quite serious.
I know you are, and I also know you're very keen to invest in agriculture. Do you have any stock picks for the segment?
Well, I mainly invest in the agricultural products themselves because I'm not too optimistic about stock markets around the world. So I invest in the agricultural products themselves through index. I actually buy the Rogers Agricultural Index is what I do. I'm sure that there are plenty of stocks that will do well in this period of time. I just don't know many of them because I'm focusing on commodities themselves. If you're a good stock picker, Lelda, you'll make a lot of money picking the stock.
So, Jim, for investors keen to follow in your lead, how did they get their hands on the land?
On the land? Well, get in your car and drive out to the farm belt and look around. There are many ways to do it. You can do something like Laguna Bay. You can put money in that fund. There are other people doing the same sorts of things. Buy a farm. If you've got a brother-in-law who's got a farm, be very nice to him, or if your uncle is still a farmer, be very nice to him. There are plenty of ways to invest in farmland if you're ambitious and can do your homework.
So is it good enough to just buy the land itself, or are managed funds the way to go?
Don't buy the land itself unless you know what you're doing buying land, or unless you can find a farmer. No, there are plenty of people who are going to do foolish things and go bankrupt doing that. I wouldn't buy the land because I don't know anything about farmland. I wouldn't farm because I wouldn't be a good farmer. If you know those people, sure. Otherwise, if you can find smart people with a fund, be sure they're smart people, be sure they know what they're doing, then that's the best way for many people.
But if we can look at some potential downsides here, when agriculture is so susceptible to out-of-control factors such as environmental conditions and commodity price fluctuations, is the risk really worth the return?
Well, no, what's not subject to outside conditions? Stocks are, they got to worry about central banks and war. They got to worry about all sorts of strikes, riots in the streets. Everything is subject to outside influences. I don't know anything that's not subject to outside influences, including gold and silver, for that matter. So certainly agriculture's got those problems. But if you do the right thing and if you do your homework, you're probably, in my view, you're probably going to make a lot of money because the overall macro conditions in agriculture are very, very positive for higher prices in the future.
So how much consideration do you give to sustainability when buying and owning land, when, as we know, nature is such a finite source?
Well, that's the most important. I mean, this fund, for instance, Laguna Bay, it's designed to be around for 10 or 20 years. You've got to have sustainability or you won't show any any profits in the future. Many people who are in there to strip assets, especially in agriculture, will lose out in the end because it's got to produce products every year, and you want it to produce more and more every year, if possible.
Now, the Australian government tells us we're in a mining boom, and you certainly still seem bullish on commodities. But can you foresee a bust? And if so, when?
Oh, no. The commodity bull market will end in a bubble someday, and then there'll be a collapse. But that's at least 10 years from now. That's not any time soon. There is a commodity bull market going on. It's been going on for 12 years now, and it's going to continue for at least another 8-10 years. I don't know how long. But in the end, what will happen? Is you will have the thing will end in a big bubble. I hope I'm smart enough to sell at the right time, but the bubble's a long way away yet.
So, Jim, if owning nature is the next best thing, where will you be looking once your side of the boat starts to get crowded?
Oh, well, I don't know now. Let's talk in 10 years, okay? Mark your calendar, and I'll see you in December of 2020, and we'll talk about, I hope, perhaps by then, the bubble will have developed in commodities. I hope that I'm smart. If it works that way, I hope I'm smart enough to sell. But then I'll be looking around for whatever else is depressed and where the opportunities are.
Jim Rogers, thanks so much for your time today, and wishing you a very happy year of investing ahead.
Likewise. I hope we can do it again sometime.